Right now, your bank is making money off your money. Not a little, a lot. Here's the number that should make you angry. The average American savings account pays 0.39% interest per year. 0.39. Meanwhile, your bank takes your money, lends it out at 6, 7, 8%, and keeps the difference. Every single day. While you sleep, while you work, while you scroll through this feed. And the worst part? You agreed to it. You signed the paperwork. You didn't read the fine print. And now your bank is quietly, legally, politely taking hundreds of dollars from you every year. I'm Felix, and in the next 13 minutes, I'm going to show you exactly how to take it back. By the end of this video, you will know 3 things. 1. Exactly how much your bank is taking from you right now. We're going to calculate it together. 2. What a high-yield savings account is, how it works, and why your bank has never mentioned it to you. 3. How to open one. Today, in about 10 minutes. With the money you already have. No investing required. No risk. No complicated decisions. Just a switch that could put hundreds of extra dollars in your pocket this year. Let's start with the math. Let's say you have $10,000 in savings. That's not a lot. That's not a little. It's a round number. Work with me. At 0.39%, the national average, your $10,000 earns $39 a year. $39. That's less than a dinner for 2. That's less than a month of Netflix. That's your bank's reward to you for trusting them with $10,000 for an entire year. Now here's the number that changes everything. The best high-yield savings accounts right now, as of this week, are paying 4 to 5% APY. Let's use 4%, because that's the conservative number. That's what the worst of the good ones pay. 4% on $10,000 is $400 a year. 400 versus 39. That's $361 your bank is keeping every single year. Just because you didn't know this account existed, and that's with $10,000. If you have $20,000, $722 a year. $50,000? Nearly $2,000 a year. Walking out of your pocket, into your bank's pocket. Quietly, every year. You might be wondering, why would my bank do this to me? Here's the uncomfortable answer, because they can. Big banks, your Chase, your Bank of America, your Wells Fargo, they have tens of millions of customers. Most of those customers never check their interest rate. Most of those customers open their account at 18 because their parents told them to. Most of those customers have kept the same account for 10, 15, 20 years. The bank knows this. So they offer you 0.01% or 0.39 or whatever is just barely enough to not make you angry. And it works. It has always worked. Meanwhile, they lend your money out. Mortgages at 6%, car loans at 7%, credit cards at 24%. The gap between what they pay you and what they charge others, that gap is called the net interest margin. And it is how banks make billions every year on your money. Now, here's the part that changes this. The internet. Online banks have no physical branches, no marble lobbies, no free lollipops at the teller window. No thousands of employees in thousands of locations. Their overhead is a fraction of what traditional banks spend. And some of that saving, they pass directly to you. In the form of higher interest rates. That's all a high-yield savings account is. Not a scam, not risky, not complicated. Just a savings account at a bank with lower costs. That shares more of the profit with you. Let me be very specific about what this is. A high-yield savings account works exactly like a normal savings account, with 4 differences. Difference 1. The interest rate, 4 to 5% APY instead of 0.39. We've covered this. Difference 2. It's online. You manage everything through an app or a website. There's no branch to walk into. For most people, that's actually easier, not harder. Difference 3. Your money is just as safe. Every reputable high-yield savings account is FDIC insured. That means the federal government guarantees your deposits up to $250,000. The same protection your current bank has. Exactly the same. Difference 4. Your money stays liquid. You can transfer it out whenever you need it, usually within 1 to 2 business days. This is not a CD. This is not a locked investment. It's just savings, with a dramatically better rate. That's it. Those are the 4 differences. Better rate. Online only. Same safety. Same access. There is no catch. There is no trick. The banks just don't advertise it because it's not in their interest to tell you about the competition. Now, before I show you how to open one, there's a question I need to answer first. Because if you're thinking, this sounds too good to be true, I understand. And there's one legitimate concern that nobody talks about. It's not about safety. It's not about access. It's about timing. And it's actually the most important thing I'm going to tell you today. Stick around. Here's what most videos about high-yield savings accounts don't tell you. The rates are going down. The Federal Reserve cut interest rates 3 times in late 2025. They've held steady so far in 2026. But most economists expect at least one more cut before the end of the year. When the Fed cuts rates, HYSA rates follow. It's not instant, but it happens. 2 years ago, the best accounts were paying over 5.5%. Today, the best are around 4 to 5. Next year, they could be 3. So why am I telling you this? Because this is the window. Not forever. But right now, 4% is still on the table. 4% is still 10 times what your regular bank pays. And the math of starting now versus starting in a year is not small. If you have $20,000 and you start today versus start in 12 months, you have already left $700 on the table. Just by waiting. The best time to open a high-yield savings account was 2 years ago. The second best time is today. Okay, so how do you choose the right account? There are hundreds of options. I'll give you a simple filter. 4 things to check. Number 1. FDIC insured, non-negotiable. Before you look at anything else, confirm the account is FDIC insured. This is always listed clearly on the website. If it's not there, walk away. Number 2. No monthly fees. The best accounts charge 0 fees. A monthly fee of $5 on an account earning $40 in interest is not a good deal. Look for no minimum balance, no monthly maintenance fee. Number 3. The actual APY. Not the promotional rate, not the up to rate. The rate you will actually earn on your specific balance with no hoops to jump through. Some accounts advertise 5%, but that's only on the first $5,000. Only if you have direct deposit. Only if you log in 3 times a month. Read the actual terms. 3 minutes of reading saves you from disappointment later. Number 4. Transfer speed. How long does it take to move money from this account to your main bank? Most good accounts, 1 to 2 business days. Some, same day. A few, 3 to 4 days. For an emergency fund, 2 business days is perfectly fine. You're not going to need emergency money in the next 48 hours with 0 warning. As of this week, some of the accounts consistently at the top of every independent ranking: Varo, Axos, Newtek, SoFi, Everbank. I'm not recommending any specific one. Do your own research. Rates change every week. Check NerdWallet or Bankrate for the current rankings. They update daily. Now, how to actually open one? This is easier than you think. Step 1. Go to the bank's website. Find the savings account page. Click Open Account. Step 2. Fill in your personal information. Name, address, social security number, date of birth. Standard stuff. Exactly like any bank account. Takes about 5 minutes. Step 3. Connect your existing bank. You'll enter your current bank's routing number and account number. This is how you'll move money in and out. It's the same 2 numbers on the bottom of any check. Or find them in your banking app under Account Details. Step 4. Make your first transfer. You decide the amount. Even $500 works. The bank will verify the connection with 2 small test deposits, usually under $1 each. This takes 1 to 2 business days. Step 5. Watch the interest arrive. Most accounts pay interest monthly. The first month it'll be small, but it'll be there, and it'll keep growing. Total time from opening to money-earning interest, typically 3 to 5 business days. That's it, the entire process. One last question I always get. Should I move all my money into a high-yield savings account? Short answer, not all of it. Keep a small buffer, maybe 1 month of expenses, in your regular bank account. Bill payments, direct deposits, everyday spending. Keep that where it is. Everything else that's sitting in savings and not being touched regularly, that moves to the HYSA, your emergency fund, your house down payment savings, your car fund, your just-in-case money. All of that should be earning 4%, not 0.39. This is the simplest financial upgrade most people never make. Not because it's complicated, not because it requires money they don't have, because nobody told them about it. You now know. You stayed until the end. And if this video landed for you, there's probably a number in your head right now. How much you have in savings, multiplied by the difference between 4% and 0.39. That number is real. That's what's been sitting on the table. The information is the easy part. The hard part is the next 24 hours. Because that's when life gets in the way. That's when you think, I'll do it later. Later has a cost. You've seen the math. There's a button below this video if you want more of this. One topic at a time. No noise. And if this changed something, even just the way you think about where your money sits, that's what this channel is for. Take care of yourself. This is educational content only and does not constitute financial advice. Always do your own research before opening any financial account.